Hello, this is David Harper of Bionic Turtle with a brief screencast on day count conventions. We need day count conventions in order to figure out how much accrued interest to pay or receive on a bond. For FRM candidates, I'm following an example from John Hull in the chapter Interest Rate Futures. And here I'll start with just the example that we have a bond where the par or principal is $100 and the bond pays a semi-annual coupon of 8%. 8% times 100 is $8, but we're paying semi-annually, so that means there's a $4 coupon on the bond paid every 6 months. And so, for example, let's just assume that the coupon pays on March 1st. That's what I've got here for a start period. And then the next coupon pays on September 1st. That's what I've called the end of the period. There's 6 months between them, so every 6 months on either March 1st or September 1st, this 8% semi-annual pay bond will pay a $4 coupon. Now, realistically, the bond will settle, in all likelihood, somewhere in between those dates. And so let's just imagine that the bond settles on July 3rd or about 2/3 into the period. And the question then becomes, how do we compute the accrued interest? That depends on the day count convention, which varies by instrument and also by the country. And so we have at least 3 different day count conventions, but let's look at here the most popular. The first is actual/actual. In that case, the accrued interest is based on actual number of days since the last coupon divided by total number of days in the period. So I can go over here and calculate that. First I'll do the numerator. I want the actual number of days that elapsed from the start of the period to the bond settlement. And in this case, with Excel, I can simply subtract, because Excel will give me the actual number of days between the two dates, which is 124 days. What are the total number of days in that 6-month period? That's going to be equal to my end period minus my start period. Turns out to be 184 days. So you see how under actual I've got the actual number of days that have accrued divided by the total number of days in the period. And as a percentage, that turns out to be 67.39. And then if I want to compute the accrued interest, I would simply take that fraction and multiply it by the full amount of the coupon, which is 8% of the principal, except I'm going to divide by 2 because it's not a full year, it's a half year here. And so this coupon is $2.69 roughly on an actual/actual convention. Now how about 30/360? So here the difference is we're just assuming there's 30 days in every month and 360 days in the year. So my days since becomes now not just a straight difference, but I'll use the Excel built-in function days 360, which treats the year as 360 days with 30-day months. And I give it the start date, comma, the settlement date, and in this case there's fewer days. There's 122 days between start and settlement based on 30-day months. And then my total days similarly in the period is the start date, comma, the end date. And now even before I hit enter, we can guess about this. We're assuming 30-day months. We know there's 6 months here. We should get 180 days. So you see the difference here in total days. It's 184 actual days, but if every month gets 30 days, it's 180 days. And then the ratio is slightly different in this case. And then similarly, so is the coupon. So you see how this starts to matter in terms of pennies and dollars if we use a different convention. Finally, actual divided by 360 is just a combination of the two, but in this case our numerator, or days since, is going to be settlement minus the start date, the simple difference, and our total days is going to be days 360, start of the period to the end of the period. We already know that's 180 days. So here really I've got a different numerator and therefore a different coupon. And so just to give you a sense of the variety, actual to actual is used by US, is the day count convention used for US Treasury bonds. 30/360 tends to be used by US corporate bonds, and actual to 360 is used to quote LIBOR rates. So hopefully this is a helpful introduction to day count conventions. This is David Harper, the Bionic Turtle. Thanks for your time.